Okay, let's move on and get some opinion on how you should navigate the current tariff chaos. Neeraj Seth, founder, CIO at 3R Investment Management, is now joining us on the show. Mr. Seth, thank you very much for joining in. Give us your initial thoughts. What have you been doing with your portfolio? Have you been making any ins, any outs? And how should one, there's so many signs one needs to juggle with.
Sure. So I think overall, there's certainly a lot of noise, and it's extremely important as an investor. First thing to do is you try to separate noise from what matters. And I think on your point about tariff, I do think there is an impact, obviously, whether it's from the overall growth impact from the export side or the sentiment impact from a relationship perspective. Looking at the markets, I'm not sure the market impact is that big. So not a huge lot to change here, to be honest. And there's still a lot of more news to come. There's still obviously follow-up discussions before the 27th of August comes and the additional 25% kicks in. So I'm not sure you want to actually have knee-jerk reactions in terms of changing a lot in your portfolios other than just making sure that you're not overexposed to certain sectors which are impacted by tariff.
Neeraj, hi, good to have you on. So what's the sense? I mean, has the market seen the worst of this tariff hit? Does it get better from here, or is this actually just the beginning of perhaps greater FII outflows?
So I think the worst of the noise, which was in the April 2nd week, the Liberation Day, I still believe that's behind us. Obviously, the noise is not going to go away, which is an important aspect to keep your eye on. From an FII perspective, I do think we have seen a significant amount of selling and outflows, but given the markets have been rather stable on a relative basis, and if I take a step back and look at the last 12 months, market is still below in case of India compared to September last year. So you've seen an implicit correction, and I do think you will see the stabilization in FII flows here once a lot of the weaker hands or the initial knee-jerk reaction is over.
Neeraj, you think by going by what Trump has to say in the last few months and the kind of, data, etc., we're getting from the United States, do you think actually all this activity by Trump is going to swiften the pace of de-dollarization? The dollar as is has been weak, but all this, talk could swiften the process. What do you think?
I do believe it actually, if not significantly accelerate, it certainly puts a zoom focus from a lot of people on the whole idea of de-dollarization, or more importantly, diversification. Now, if you look at whether it's the foreign central bank reserves or the trade or a number of other aspects, dollar still is the reserve currency of the world. I don't think that's changing or going away, but the diversification has already started. If you look at the incremental flow of dollars in the world, that incremental allocation is slowing down, and I do think that's going away anytime soon. The world will have to think about a more diversified way of keeping your currency exposures rather than being overexposed to dollar, whether it's your reserves or the risk assets.
Neeraj, is India still the preferred market in emerging markets or in Asia-Pacific, or has that changed now? Because what were geopolitical tailwinds in the past have turned into headwinds.
Yeah, so there's certainly an impact of that you will see both in terms of the data and sentiment. Obviously, there's a growth impact. As I said, you can have a quarter point to a half point growth impact because of the export sectors taking a hit. The sentiment impact that you are seeing more from a technical standpoint in terms of the FII selling, I do see that obviously having some impact from a capital flow standpoint. But again, if I take a step back and look at the next decade or 2 decades, is there going to be some shift in the structural story from a growth perspective in India? I'm not sure about that. And if anything, this is a good wake-up call when you think about the economy from the 4-engine perspective of government, corporate, consumer, and exports. If you're seeing weakness in exports because of these, well, you need to find new products, new destinations for exports, but more importantly, deepen the corporate and the consumer side and keep the government spending stable. I do think the equation still works from a long-term growth perspective for India.
So, Neeraj, what are you buying in India now?
Well, I still like some of the sectors which are more domestic focused. The financials are still looking good. The domestic consumer sectors are still good. So I don't think there's a lot changing on that front. If anything, they continue to obviously grow more competitiveness as you see the growth in these sectors. So I don't think you have to change a lot other than as I said, zoom in, look at which sectors, which is a small subset of the markets when you think about the exports aspect, specifically the one that gets impacted. You don't want to be too exposed to those at this point.
Neeraj, final question before I let you go. What are you expecting, since we're going to be looking inward, monetary and fiscal? What kind of moves are you expecting? Because the economy is a little bit soft, but the hope is now we're getting into that festive season. Things start improving. There's going to be more more money in the hands of the consumers, and hopefully this economy gradually gets kickstarted. What are you expecting?
So I still think, given the consumer is still, I wouldn't say weak, but on a relative terms weaker, and the corporate capex hasn't picked up, and there's some softness that can come from the standpoint of these geopolitical tensions. I do think the path forward is further cuts from RBI. I'm more in the camp of looking at a 4 handle as a terminal rate rather than where we are at 5.5. And from a fiscal standpoint, a little less so, given I do think the fiscal room is limited from a government perspective to expand too much. So that I, in fact, believe and hope that the fiscal path will be more towards consolidation and monetary more towards easing in the next 12 months.
Okay, all right. We'll leave it on that note. Thanks, Neeraj, very much for joining in. And we look forward to another conversation soon.